Today we're going to talk about a couple of different common insurance terms that you're going to find really on almost any sort of property policy. But for this topic, we're really going to center on your home policy, a home or dwelling policy, condo policy, or renter's policy. Just something that's going to be more for a personal property for the place that you live. Two terms that you'll hear get thrown around are going to be replacement costs or actual cash value. Those are two different terms that are used to describe how the policy is going to pay you if you have damages. Replacement cost is the preferred. Sometimes you can't get replacement costs because of maybe the age or wear and tear or different things like that associated with your home, or maybe the location of your home. But here's the important thing to know between the two of them. One of them is going to depreciate your claim. The other is not. Actual cash value, or ACV as we sometimes refer to it as, is going to come up with a number that they're going to pay you for your claim, for your damages, based off of what the replacement cost is to fix it or replace it, minus depreciation, age, wear and tear. So for instance, let's say that you have a brand new television, and you buy a brand new television, a couple years go by, and you have something happens to the television, it gets struck by lightning, and you have an ACV policy. They're going to look at that television, see how much it would cost to buy a brand new one, and then because it's now 2 years old, they're going to depreciate that claim. So you're going to get less for how much that claim is. However, if you have a replacement cost policy, sometimes we say RC or RCV or something like that, but replacement cost or replacement cost value means they're going to buy you new for old. So you may have a television that's 2 years old that gets struck by lightning, but they're going to buy you a brand new one that it would cost now for a like in kind. Let's take this and think about this for your house now. Let's say that your home let's say the tree falls on your house, and it's going to cost $100,000 to fix your house. If you have a replacement cost policy, they're going to pay the full amount of money it's going to take to fix that house, $100,000. If you have an actual cash value policy, they're going to figure out how much it's going to cost, and then they're going to depreciate that claim, and then pay you based off of that. Well, who pays the depreciated amount? You do. Don't let yourself fall into this position. Now, sometimes, like I said, you can't help it. But if there's an option, it's better to have replacement costs. Now, understand you may have to pay more for your premium or for your policy because you're going to be covering it for a larger amount of money. But think about this. If you end up in that situation where they're going to depreciate your claim, have you really saved any money? If you have that issue, and let's say that the house, they depreciate that claim 25%, now you got to come up with $25,000 in that claim scenario that I just mentioned about the tree. If you saved, it would take you 25 years of saving $1,000 a year on your premium to break out even. Don't let yourself fall into that trap, and don't let yourself fall into that mistake, of that happening to you. If you'd like us to take a look at your policy, just reach out to us. You can text us, you can call us, you can email us. I have even a form on the side of our website that you can fill out, and we'll be glad to reach out to you and take a look at your home policy to make sure that you're adequately covered. We try to make sure that you have the right coverages for you. So reach out to us. We'll be glad to help you in any way that we can and answer any questions that you have. Thank you.